say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that Skrilla on the Rilla.
Welcome in to another episode of your favorite financial entertainment podcast, Just the Tips. Hablamos español. We have with us, I'm Gordo, as always. We have with us George.
Jorge.
Jorge. And Bruce. El Bruso. Welcome, guys. How's everybody doing?
Living the dream, my friend. Living the dream.
Excellent. Anything fun last weekend? This weekend, and you guys go out yesterday and Friday? You just watching kids? What's going on?
I went out to California actually. I went out to the Palm Desert.
Were you working or for pleasure?
I went out for
just pleasuring yourself.
You'd be surprised what you can find.
I went out to all of the above. But no, I went out to play a little golf.
And... the desert people. I always feel like it's like almost like third world in like Palm Desert and like all these like really sort of desert-like places in California. It's like they have these like rich places where all the tourists are, and then you get outside of that, it's like this really barren kind of trailer parky thing.
It's the third world, except I think it's the highest volume Bentley dealership in the world. Like there's also like an insane amount of money there. It's pretty wild. But it's nice. It's compared to the weather out here on the East Coast, man, it's basically perfect. So it was fun.
Let's talk about the news. I feel like I'm nominating. Well, you're gonna always give me some techno bullshit, but yeah, Bruce, why don't you do it?
All right. News brief.
That's a new version. I like it.
It was definitely. That was fresh. That was fresh. So I'll take that. Let's talk about the market. So I guess a lot of things have been happening. We have been happening here. We have Elon kind of taking a total sickle to all of the people at the Social Security office and the government. They're stopping payments, and it's just
I hear it's good for his businesses. Tesla stock is up, right?
Yeah, I love the Tesla commercial, the used car commercial by the President of the United States. Yeah, that was freaking very, very dignified. I don't
think he's ever driven a car. Do you?
Why would he need to? Only peasants drive cars. Yeah, maybe like a sports car on a track. He might not have a license. I don't know, but yeah, it seems like you've got tariffs, a tariff war beginning here. You've got massive government spending disruption, just markets hate uncertainty. It's just lions and tigers and bears, and it just seems like
mostly bears.
For those who are unemployed like me, it doesn't feel like the budgets are going to start loosening. Perhaps quite the opposite. I mean, after a pretty weak last couple of years, really. I mean, especially in tech. So it just kind of feels like you thought that the safety world got you out, and now here comes somebody else from behind the, I don't know. I don't know what the scenario is. Somebody's basement, Zed or whatever. I kind of feel like, maybe you just talk about, UiPath, that kind of shit the bed on government, right? George,
yeah.
Talk about that for a second.
Yeah, one of our last covered names. So UiPath reported, and they mentioned, a lot of government contracts either getting canceled or pushed out due to cost-saving efforts, right? And so if you are trying to sell into the government right now and people are getting laid off and budgets are being cut, like, I don't know if those are coming back, but they're seeing it. So they raised the, they're a little bit of a canary in the coal mine. So it does make me wonder, for other companies, and they're supposed to drive efficiency, right? Which is another thing. Your UiPath automates what humans do. So if anything, you could say there's this narrative out there that, Elon and Trump are going to drive efficiencies in the government. It's going to be more software. They're going to modernize. You're not at least seeing that right away. It's, cut people, and if there's no one there, there's no budget. Like, they're not buying software either. So I think they're just cutting and seeing what breaks. It's very much like what Elon did with Twitter.
Yeah, well, it reminds me, like, I think probably got a little bit of, inspiration from Argentina, right? Like, by the way, So Argentina, they had some
They
pain.
love what's his name? Melee? Is that the guy's name?
Yeah. So he's
The
very
chainsaw.
Yeah, he's insane, just like Trump. And so,
But it's working in Argentina. Look at their market. Their market's done great. They have real problems though.
yeah,
I don't know if the U.S. has the same problems.
Well, and they're saying too, like some of the numbers that they've been putting out there, like inflation. I mean, they're sort of like China level of trust in those numbers, right? Like they're saying that, well, they're picking up at the fact that they're like including weird things in there that nobody buys, and just like kind of doing things to make it look like it's not really as much inflation.
Well, I think that's historically even, right? I mean, Argentina. I used to work in a industry mining that we would invest into mining. There's a lot of mining in Argentina, and the inflation rate was always stated lower. But if you were on the ground, you always saw a much higher inflation rate. So the government's been fudging those statistics for years. I don't think anything's changed, but like I don't think the market is smart enough. I don't think they would lie, and I think you're seeing real changes there. But again, we don't have the same problems that Argentina has, right?
Well, the first thing is we have a reserve currency, right? And that's a world reserve currency, and that gives us a lot more sort of people. We have a lot more degrees of freedom, than they do, and like we can just monetize our debt, and just, hey, we'll feel that someday eventually. I mean, obviously seen the reserve status of the dollar kind of erode with Bitcoin and China, the yuan. People just looking for other places to put their money, besides U.S. Treasuries, also. So, but yeah, it just feels like I don't know. Yeah, I think there's a spirit amongst. There hasn't been a lot of cracks in the right wing facade. Like people are like, hey, this sucks, but it's a necessary evil to kind of get to the other side that we're seeing in Argentina, and I have some sympathy with that. It just feels like complete chaos. It doesn't feel thoughtful. It feels like, these guys are just, shoot first, ask questions later. Some of the stories around deportation are pretty ugly right now. I mean, that doesn't really affect the economy per se, but I think it might affect the political, power. Yeah, well, actually, I think in a negative way, right? Like, we need immigration for this economy. That is another inflationary thing, just like the tariffs. So, like, I think that right now, the way things are playing out, I mean, I guess it's possible that, if this medicine that he's giving us with the government works, then some of these inflationary things might not, be as hurtful, and we'll absorb it and relocalize the economy. It'll be this utopian, Trumpistan, and we'll have Republican Supreme Court and Republican presidents for the next 40 years, I guess.
But there's always a transition period, right? I think we're in that transition period, and it's not going to be pretty. So, I mean,
people talk about
end of the day, I'm all for like not wasting money, right? Like, I don't think anyone's going to argue with that. If there's a lot of waste, and I mean, I walk into DMV and I'm just like, there's got to be a better way.
Yeah,
which is a recent experience.
Yeah, I think the big issue with these well, Elon tells these crazy stories on the Rogan podcast, right? About how there are all these guys that don't show up to work, at all, or they're dead and they're still getting paid, and just the horror stories that just get all these people fired up. Great, all these white guys in red states.
But do you believe them?
Well, the thing is, there's waste. There is. It's really a big question of magnitude, right? I mean, companies have waste, right? Like, I've met so many wastes of space in public companies. I mean, CFOs included, and you're just like, who are making millions of dollars a year, who aren't adding any value, and in fact, destroying values. So yeah, is it believable that without a lot of oversight, these kind, that in the darkness of the government, Leviathan, absolutely. But I just feel like, and people are talking. Some people that are sort of sane faced are talking about 6-7 years for a kind of economic transition that we're facing with these tariffs. I mean, this is a very massive structural change. Yeah. And then on all these knock-on effects from other countries like China and Canada. And, I mean, you don't get to do this in a vacuum. And so I feel like, and at the end of the day, a tariff is a tax. Yes. And it will frequently be passed on to, depending on the elasticity of demand, it's open our micro textbooks, it'll either get passed on to the consumer, or the hope is it gets passed on to the producer. But if there's not an alternative supplier, and there's inelastic demand, or said another way, right? People are kind of price insensitive. It's us that pay it.
Yeah.
So like, how?
In most cases, they were historically used to protect your own industries, right? Mm-hmm. And here we're just slapping them on indiscriminately. Not necessarily protecting our industries, right? It's just, hey, big trading partner, we're in a deficit. to you, and we want to collect more money. We don't think we should be in a deficit. Let's extract more value. We're your biggest trading partner. So in some ways, you might say, hey, there is some leverage there on a macro basis. But like I think for most part, to your point, there's not really alternatives here because it's not like necessarily it's like suddenly we need to protect XYZ industry. They're just slapped on randomly, it feels like. Or it's like, okay, what do we buy a lot from Europe? Oh, we buy wine. So let's slap on a tariff on wine. Well, that's great, but like end of the day, yeah, we have a wine industry here in the U.S. It can replace it, but not all of them are necessarily like geared that way. So it's a very different motion than I think we've seen historically, where it's like, yeah, let's protect our steel industry. Let's protect, whatever industry is under pressure because the international player is more efficient than we are, or has some advantage that we don't have. So, I don't know. It's interesting. I still don't know the end game for all the tariffs, right? He talks about fentanyl at the border with Canada and Mexico. Canada, there's barely any fentanyl that comes across. So it's like, what is he actually trying to achieve and do? That's what's not 100% clear.
Yeah. So, yeah. Well, at the end of the day, I mean, I feel like, yeah, they're trying to deliver on, on the promise of, I mean, one of their big, I think, mandates, right, was like, hey, this government's out of control. And it's true. It really is, right? Like, I mean, the percent of GDP, I've lost track of what the deficit is, but it's just like, it's horrifying. It's not sustainable. And like ever since COVID, right? Like we've just been spending like crazy. And at the same time, this whole DEI stuff, we lost our mind. And to some degree on the left, I count myself among those people, so he's got a bit of a mandate right now, but I feel like he's about to, he's shooting himself in the dick so quickly. Like I feel like, I mean, how far we're like a month and a half in this presidency, or January, so
2 months,
2 months in this presidency, and like already it's like chaos. Not even mentioning that all these, cabinet.
He likes sowing chaos.
And they're just all narcissists do. I've learned. So it's how you get power. It reduces accountability. And people kind of like, it's kind of like the movies, the reality show Brought to America, unfortunately. So yeah, I don't know. At the end of the day, all this makes me say, like, there's some tiny part of me, about 10%, that believes that this is going to be net positive, and we're going to take this government, and there's not going to be, where the medicine's worse than the cure. But right now, it feels to me like, this medicine is pretty bitter. It has pretty bad side effects, and the patients may, not die. Obviously, these economies are going to die, but it could be a depression. Like it could be. And it's hard to pull out of that, right? Like these, these feedback loops around confidence. Like once you lose that confidence,
well, you lose trading partners. If Canada suddenly ships all their goods to Europe, right, wants to be the preferred, they don't trust the U.S. anymore, you lose that trading partner. You lose that status. So that's just not, you don't flip a switch and turn it back on. That's my concern, right, is you damage these relationships and you're no longer the preferred partner. So who knows where it takes us.
Yeah. All right, let's quickly move on to other news items. Let's talk about Wiz. The Wiz, a great movie from the late 70s. Reference to the Wizard.
I mean, I think the headline is obviously really interesting, just in terms of like the overall deal value. I would say.
Recap what Wiz is, by the way, Bruce. Give us the recap for the people that are not.
Yeah, but I mean, Wiz is sort of a pioneer in next generation cloud security. So every enterprise basically has a lot of their infrastructure in the cloud. In order to protect that, they need a next generation type solution, especially given like the surface area that they're covering now is much, much larger. And so Wiz built an offering that allows, most enterprises to address all of their clouds in a really, really effective way. With they started with an agentless kind of architecture, so it was really seamless to deploy, and they were able to scale really quickly. The founders came from a company that Microsoft acquired called Adalom several years ago, and so when they first started Wiz, it came out with a lot of fanfare. The company's only 5 years old, and it was rumored about 8 months ago that Google was going to acquire them for $23 billion, and kind of the whisper rumor around that was the deal didn't get done at the last second because of regulatory concern under Lina Khan and the Biden administration, and so they kind of pushed pause on it for about 8 months, and they accreted $10 billion more in value, and they ended up announcing a deal here at $32 billion in an all-cash transaction for the company. I think like there's a lot of things to say maybe about the deal specifically, and like maybe enterprise is back. I think honestly, like this is a really good signal though for maybe how we should think about the M&A environment going forward. I mean, Trump fired the 2 Democratic FTC folks that were left on the committee. This is a deal like I don't think that would have happened under the Biden administration. So I think it's and obviously the big consideration here is going to be around the regulatory environment. So I'm assuming they've like chased that down as far as they could take it before announcing a deal like this.
Sundar Pichai did kiss the ring. He donated $1 million to the Trump inauguration fund, and he was there and showed up and sat in the billionaire row. So I think he's kissed the ring.
Yeah, and so I mean, let's see if like $1 million buys him a $32 billion acquisition.
That's a good return on investment.
Yeah, because the Trump stance though has been like not as favorable as I would have expected in terms of like making sure big tech doesn't get bigger. So we'll see. Like it'll be interesting to see like what the first couple of deals out of the gate look like. But so far, there's been a couple of big deals that have been announced. Like MoveWorks got announced to be acquired by ServiceNow. Weights and Biases got announced to be acquired by CoreWeave, and these are being done at like 25 plus times multiple. I think Wiz is being done at like I want to say 45 times or something like that.
So one of the first deals that the Trump administration signaled anything on was HPE buying Juniper, and that was a deal that was assumed to go through under the Biden administration, and then suddenly it's like no, it's going to get a second look. Now there's question whether it gets through. That's a tech deal, and so is the Trump administration as friendly as we thought? I think is an open question.
That's an old tech deal, though. New tech. No. I don't know. I think it's going to be, honestly, I think it's going to be a little schizophrenic. Like, I don't think there's, like, under the Biden administration, it's pretty clear. Like, if you were a big tech company, you had, like, almost no shot of making real acquisitions. I think under the Trump
Amazon couldn't buy the Roomba. Yeah, which is now going bankrupt.
iRobot. They couldn't buy iRobot, yeah. It was just, I mean, I thought that the policy was like super draconian under the Biden administration. It shut down the M&A environment. The IPO market was shut down. So like the entire venture asset class was sort of in a standstill in a lot of ways because you didn't have any liquidity options really that were viable and on the table. So I think like this administration will, like, it'd be hard for this administration to be worse, but I don't think it will be just like across the board better for every company. Like I think they'll pick and choose their battles, but they will pick some battles to fight, I think.
What do you think, not to get too far off course here, but like the interesting debate on this deal is, so they Wiz secures the big like 3 clouds, right? It secures Google, it secures AWS, and it secures Azure, Microsoft, right? So if Google acquires this, do they stay neutral and they're securing everybody else's cloud, or do they turn it only to Google Cloud and therefore it's anti-competitive? How do you think about that? What do you think they do?
I think that's what makes the acquisition like just kind of made everyone scratch their heads, because the reason that Wiz is so powerful is because they're sort of like an arms dealer for every enterprise, and most enterprises are multi-cloud right now. So if you get acquired by Google, you sort of de facto become not so much a multi-cloud solution, but sort of a single cloud solution. And maybe you have some connectors to the other ones, but like Amazon and Microsoft are not going to do you any favors here. So I don't know. I think a lot of the enterprise value maybe would go away, like in theory, but I think this is just a big, cloud play by the entire kind of Google enterprise. Like everyone from Thomas Kurian to Sundar is all in on cloud. They're trying to chase both Microsoft and Amazon, and maybe security is sort of like the golden ticket to have them at least maybe hop over and get closer to Microsoft at this point, because I think everyone views them as being in a distant third. So I don't know. It'll be interesting to see what happens, but it is kind of a head scratcher in terms of like what the industrial logic is for buying a multi-cloud solution.
Do you think Google gets bigger into security here? I mean, it's been a big business for Microsoft in general.
I don't know. We'll see. They acquired Mandiant a couple of years ago. That was one of their largest acquisitions for about $5 billion. This is by far, I think, their largest acquisition ever, and I think one of the largest acquisitions in security ever. Maybe just ahead of Splunk, which got acquired by Cisco last year. But I don't know. I think they've made a couple of overtures into security. They have this Chronicle platform that's kind of their, cloud security platform. They made the Mandiant acquisition. They made this acquisition. So they've tucked in some things. They've bought a couple other smaller companies as well. I don't know. We'll see. Like, it doesn't feel like they've had like a really kind of well thought out, fully integrated strategy in cybersecurity. They've sort of just like been buying some like juicy assets here and there, but I don't know if they've been able to put it together in a way that's like, oh, Google's the new, Palo Alto Networks. Google's the new CrowdStrike. Like, they have a viable play against the major kind of cybersecurity vendors right now.
Yeah, makes sense. Gordo, what else in the news do you want to touch upon?
So I think we had the big ones. I mean, you might want to give real quick on Rubrik. If there's any other topics, I'm open-minded, but I think the Wiz acquisition was a big one. Oh, CoreWeave IPO. Before we do that, actually, CoreWeave IPO is supposed to be pricing this week. I don't know what market cap they have it at, what the multiples are like, but it's an interesting company. It's in the they're a big buyer of NVIDIA chips. So they're kind of like, there's a bit of a referendum here on, on AI demand long term here, I think. And also, I guess, on their sustainability as a service provider, basically just renting chips from NVIDIA. Like, I don't know what their kind of, point of difference is. There must be one, but or at least some kind of artificial one, like a relationship. But, you guys have thoughts on this CoreWeave IPO? You guys buying it?
We don't know how it prices. I mean, that's the open question. But outside of that,
what do you guys think? They're going to have to revise the range. They always revise the range. If you don't revise the range upward, massive failure. The question is how much.
Well, they're IPOing in a pretty negative market, which is interesting if they go forward with it.
I think part of the issue with CoreWeave is that there aren't a lot of like true comps in the market for what their business does, and I think they have like pretty major capex obligations, which I think makes it like harder to understand what maybe the true long-term value of the company is. That's sort of offset by the fact that their, I think, revenue top line at scale has been growing like 7x year over year. That obviously is not sustainable, but they've been able to like basically become kind of the number one GPU cloud in the market, maybe outside of the big three clouds that we talked about before, maybe the largest GPU independent cloud. I think the market's there for them, but I think what I heard is that the offering is going to be much smaller and the valuation is going to be lower than they had originally kind of targeted as a headline. And so I think maybe people are just in general a little bit more nervous from a macro standpoint. They're more nervous from a micro standpoint. I mean, the Mag 7 companies that have a lot of exposure to AI are obviously nowhere near their 52-week highs. So I think it's one of those things where they're selling into a market that's pretty skittish. So I'd be interested to see where it trades. I'm on the sidelines here though.
I'm surprised they're going to IPO. I would pull back. Honestly, like, why would you go into this market that's been a little bit of anti-AI recently, right? After DeepSeek came out and put a scare into everybody. I mean, that was right ahead of the Trump tariffs, and so those two have kind of played off each other.
It seems
but
like
I think,
go ahead.
I think if you believe, like, end of the day, if you believe in, I think you were bringing this up, Gordo, before we jumped on. It's like, what do these AI data centers, what are the functions they're providing, right? And so, like, we've been through a phase right now where everybody is training the models, and so that's been very heavy NVIDIA, GPU, compute. And then as you move to more actual applications and uses of these models, you get into inference. And so if you believe, Jensen talks about inference being much, much greater than even the training piece. And so if you believe that and you believe CoreWeave can be a beneficiary of that, I think that's the long-term bull thesis to be excited here. There are, other chips and other, like, architectures that are coming into play when you think about inference, like is the NVIDIA GPU and all of that like the optimal inference? A lot of people would argue no. There's companies like Grok out there, not Elon's company, but the one with K or Q, sorry. That is, makes their own chips. They do inference much cheaper. A lot of the web scalers have their own chips for inference. So the question is, like, does CoreWeave compete in the same way in the inference market as the market moves that way? That would be the big question I have.
Good insight. Okay. It's interesting to see Klarna and what is the other one? StubHub. And what does it tell you? Like, basically, I assume these guys are just kind of drafting off of CoreWeave. Like, oh, now, okay, it's open. It's open now, right? Like us too. Trying to jump into the into the act, trying to create a threesome and foursome here. I don't know. It's just kind of, these things are not like StubHub is definitely not a AI play. It's not really even a tech. I mean, it's not a tech play. It's really just a marketing play, I think. So I don't know. Weird that I think it just shows that there's a lot of people just dying to get out. I mean, I think I mentioned this before that I talked to a software maker that they had 35 airplanes in the runway for IPOs in the second half. Everybody's just waiting for things to get better. And of course, the bankers are all saying, nope, next year. They're in the business of expectations management, I feel like. Maybe, of course, with the tariffs, I actually probably agree. But anyway, I feel like my weather forecast for IPOs is stormy. Like I feel like it's going to be like, and it may be that this CoreWeave IPO, it's just ugliness of it may just scare the shit out of everybody and just cool off any kind of IPO hunger, I think. So I'll be watching this one really closely. Any other, you disagree with any of that, guys, or any other comments to add to that?
No, I guess the only last comment I'll make is I do think most of the IPO class from last year did fairly well, right? Including one we covered, which was Rubrik, which maybe we'll close on, which is, they reported probably one of the best quarters that I've seen recently, right, in the marketplace. And I was the bear on them, but they grew their subscription cloud ARR by over 60%. They steadily beat the market, beat on revenue by 11%. Like, that's a huge beat. They're one of the few companies still expected to grow over 30%. And my criticism of them was, their sales and marketing was highly inefficient. They're driving efficiencies there. So they're still not an efficient company overall, but the stock jumped. It's performing. It's one of the best performing stocks of the year. If they can continue to keep those trends, I think it's interesting. So,
Reddit performed well too. Reddit
performed well too. I think Astra Labs, I haven't checked that one. Last time I checked, they were performing well. Maybe they've come down with the AI. But yeah, a lot of the ones from last year did well. So that's the case for bring on fast growing companies. Like, there's a lack of growth in the market right now. Yeah. If you have growth, bring it, right? I think you get a premium. So that's the argument for doing it.
I think there's a lot of high-quality companies that are on the sidelines that are waiting for the right moment. But, I mean, they've been on the sidelines for years. They started for a long time, decades ago. And so, I think, if Trump hadn't sort of torpedoed this market with tariffs and volatility, we would have seen a lot more activity. But now people are just we're filing everything, and we're going to push the green light at the soonest sign of, opening.
Mm-hmm. So. Okay, good stuff, guys. Well, let's get down. So let's move on to the main event.
Let's get ready to rumble. Sorry, I feel like I have to do that every time.
Wait.
All right. So what are we talking? We're talking Docusign, ticker DOCU. I feel like I'm in the morning calling in. In one corner, weighing in at 190 pounds.
Oh, you've nailed it.
Well,
Oh God.
And then, oh my God. And then in the other corner, standing, 6 feet tall, George. Where do you live?
New York.
No, I'm talking about George. I forget what town. I mean, maybe you want to say.
We'll call you the Bay Area. I don't want to say Bay
Area Bull, George.
Silicon Valley.
In the other corner from the greatest city in the world. And home to President Trump, used to be anyway. No.
He's up where the rich people live, outside the city.
Yeah, so
where the real rich people live.
Lies.
He's in the burbs, hanging out with Tony Soprano. So Yeah, we got Brucey doing the bear case. So, George, first of all, let me say in advance, you're better than this. Better than the title. Not much
This
better.
slide is what? Sign me up for DocuSign? I mean, come on.
It's just not funny enough. It's just too vanilla. I mean, yeah.
You know, I did ask AI for
This is a
some
bad
funny
dad
ones,
joke.
and they were horrible. No, they were horrible. Well, I am a dad, so
I
you
mean,
know.
you put this pen in there too to make it
It's a
extra
fountain
bad.
pen.
Did you have your kid do this?
It's horrible. You're fired.
I actually think my
Sign me
kids would
up.
do better. Sign me up for this. All right. Anyways,
my
you
God.
guys can criticize.
How about where do I sign? Or that'd be a little better.
You have about 35 slides. Let's get cracking.
All right. This is one that's near and dear to my heart.
How many
All
slides
right.
do you have, by the way?
I think with the intro slides it's 8, but there's like 2
Okay,
intro
we're getting
slides,
better.
so call it 6. Anyways, there's lots of content.
When I tell them it's 8, if the girls say, "Oh yeah, let's assume 6." So they'd be wrong. They'd still be high. So anyway,
All right.
Go ahead, George.
All right, let me intro this because Bruce had so many internet problems. I've probably had about like 3 or 4 beers now, so forgive the slurring, the stuttering. Oh, just kidding. All right.
You'll need 3 or 4 beers to pitch the bull here.
I know it's a pretty easy business. Let me tell you. Everybody has e-signed something probably at this point. So e-sign stands for electronic signature. That's what DocuSign was known for. It came up really in real estate. That's where it really cut its teeth. So you're signing real estate, agreements. They were the go-to as part of that process, and then they eventually, went out from there. What DocuSign will tell you in terms of the e-sign market, just to kind of give us a sense of like what is that market, how big is it? It's a $25 billion TAM market according to DocuSign. That was something they put out kind of in the 2019-2020 timeframe. But as of 2023, there's only $4 billion in revenue that's actually like flowing through. That was an estimate that I saw. So you have a huge TAM, and that kind of says, hey, if everything was e-signed, you'd have this huge amount. But actually, not everything needs to be e-signed. And so today you do see like a smaller number there. So you could say, is that an opportunity, or does that ever like actually come through? The other thing they moved into was contract lifecycle management. Now, today they don't talk as much about that term as they have historically. That's been an industry that's been out there for a long time. It's a big market. But, if you think about it, it's like, how does an enterprise like manage their contracts? And how do they flow through that? They need an operating system to do that. Well, no one's really adopted that. IBM had a product for years. It's been out there. It's full of friction. But you could imagine if every large enterprise said, hey, we need a CLM, this would be a huge market. It would be like ERP. It would be like CRM, your revenue platform for salespeople. So, but people haven't done it. And, end of the day, like we'll get into that. But like, what is CLM? It's contact creation and editing templates. It's the approval process for contracts. It's a database and storage, so it's your repository for those. It can provide reporting and dashboards, and then it integrates with other systems, so it creates workflows around those integrations, be it ERP, CRM, whatever that may be. And DocuSign also estimates this is about a $25 billion market. So between eSign at $25 billion and CLM at $25 billion, they have a pretty sizable TAM at $50 billion, in which they are really kind of a leader, or seen as a leader in this market. So they're chasing a very large TAM, and I think one of the questions is, can they actually execute on that TAM and close that?
But just in terms of the TAM, like, so it's a $50 billion TAM, allegedly, and, in their core market, it's 25, and then the CLM market, it's 25, and the company is worth $18 billion. So they're worth, like half of their entire TAM. Is that a reasonable assumption, or?
Well, what is Salesforce worth, and what is the CRM TAM? Like, I mean, what do you how do you do that
Salesforce would
math?
probably argue that the CRM TAM is in the trillions.
I've never seen that number. That's a huge number.
Yeah, but I mean, if you'd say like, oh, this is, they have the Slack product, they have their new AI product, they have like all this, all these different parts of their platform. I mean, I just think like, I wonder like, can you have a business whose enterprise value is as big as their core TAM, plus the
It's
CLM?
not as big as their core TAM. It's a fraction of their TAM.
Their core TAM's like 25 billion. You just said for the e-sign market.
50 billion between
50
the two
with the CLM market.
Yeah, 50 billion. Those are the
Right.
markets they're playing in.
But
And I think CLM is a big bet for them.
It's a big bet. It's a much smaller part of their business. But anyway,
Today,
keep going.
All right. So let me talk a little bit about the platform, and then I'll get to like the financials of the company and kind of where they are and who they are. So they've gone away from talking about CLM. CLM's kind of become a little bit of a dirty word because it's something that's never quite taken off. And so they acquired a company recently in the Gen AI space I'll talk about called Lexion. Lexion's kind of a Gen AI player for legal workflows and CLM. And they've been labeled this new platform the IAM, which is Intelligent Agreement Management. So what does that help you do? It helps you create documents. That can be forms. That can be templates. It can also help you review contracts intelligently with Gen AI. The next phase after you create is you commit. So that can be e-sign, of course, or also they have a platform that helps you do identity verification. So if you are signing, whether that's notary, they have partnerships there to do online notary versus having to do that in person. Or you can use a digital platform to say, okay, take a picture of my ID, take a picture of me, make sure I'm the person that I say I am before I'm actually signing. So it's a higher degree of certainty with that platform. So they help you commit, and then they help you manage those contracts afterwards. So it's, okay, what are my obligations for that contract? When is renewals coming up? Give me analytics. So a great example is like, during COVID, all sorts of like rare situations came up. Where do I have force majeure in my contracts? Where could things go awry? You could throw this in as an example into the IAM platform, and it could give you answers as to like what kind of obligations you have in the contracts that you've signed around that. And then they try to drive workflows and everything else off of that with their Docusign Mastro platform. And then they're obviously a repository for these as well. And so that's kind of their platform. And they do have offerings that are verticalized for legal, HR, which has been strong for them, procurement, sales. And a lot of what drives their sales is tight integrations into those systems of record. So like Salesforce is a close partner on the CRM side for sales. Procurement, they've struck up a close partnership with ServiceNow. HR, it's Workday. So they have partnerships around these that they're driving, really tight integrations with those platforms to kind of drive this workflow around the different contracts that exist for them. As a company, this is a company that their stock went crazy during COVID, much like Zoom. Why are you showing me ZZZ there, Gordo? Are you falling asleep? All right,
Nobody's
mind.
loving it, right? Oh, keep going, George. It's so good.
When legal agreements aren't exciting for you? Oh, come on. All right, so this is a platform that went crazy. I think they IPO'd in like 2018, 2019. The stock came out, in the double-digit range. They went all the way into the 300s during COVID. So, it was up 600% from IPO ranges. And then it came crashing back down, as a lot of these did in 2022 with rate tightening, kind of the SaaS market. If you look over kind of the period of its life, it's slightly outperformed the S&P 500, which during this time frame, to be honest, is not actually a knock. It's actually, it's been driven by a lot of stocks like NVIDIA, everything else that have done really well. So it has been a good performing stock, over that time frame. It's done about 130% returns, but it's been a volatile ride for most folks.
This is a pandemic stock, right? I mean, it drove anybody that was doing like in-person signings had to use DocuSign.
Oh, 100%. And they got a lot of benefit during COVID from volume. So a lot of their pricing is volume-based, where how many e-signatures you do. So I remember we were personally shopping for homes during COVID. you had to sign a waiver to go into a home. And it was always DocuSign. They also had the PPP loans, if you remember those, right? So it was keeping all these small businesses alive. Those were all done over DocuSign. So they got this big volume spike that was more one-time volume that didn't really exist afterwards. And so part of the crash in 2022 was a lot of that volume disappeared because COVID was over. So it pulled forward a lot of demand, and it also, a lot of kind of artificial demand was created that went away. So that's a little bit of the volatility in the stock. It's since been growing more like a mature company, but I would say, mature digital company. So if you look at their last several quarters, the last 3 quarters, it's been ticking up slightly. So they grew in Q2, 7%, then 8% in Q3, and 9% in Q4. So it's been ticking up nicely. As Bruce mentioned, the healthy market cap, almost 18 billion. EV is about the same, 17 billion. Sitting at about 3 billion of revs. Off of that, they have a healthy EBITDA margins, so about a third of that turns into EBITDA, 1 billion. And they're expected to grow this next year at about 6%. EBITDA slightly below that, so they're actually looking to spend to continue to drive this business. It is a high-touch business. I think a lot of people don't appreciate that. So they do a lot of direct sales. Only 15% of their sales actually come from like web. You would think this would be a very like PLG-driven sale, and I do think that's part of the opportunity, and that's what the new management team that came in around 2022, 23 has really been pushing on, is driving more kind of digital, low-touch sales motion, and they've been having success with that. So they've actually made this company much more profitable, and that's something that continue to see going on in the future here. One of the opportunities, so kind of turning to like what's the thesis, like why would you be excited about the stock? So one is it's been very much a domestic story for the most part. So about 3/4 of the revenue comes from the U.S. or North America. Only 28% of revenue is international. International is much less penetrated. And so really, if you are to be excited about that 10, you have to believe that they're going to be able to go out and get international. We do see that growing faster for them. So while the company overall in this last quarter grew 9%, international is growing 12%. There's a lot of parts of the world that haven't quite yet adopted digital signatures or fully adopted it. And so that is part of the opportunity that they're going to go after. And they've got a very detailed plan about how they think about those markets and how they go after it. A lot of it really, they have to go in and they have to really make these, make the product work for local markets. And so that takes some investment, but I think they're doing that very thoughtfully under current management. Whereas before, during the pandemic, they threw salespeople on every market, because it was like shooting fish in a barrel. And now they're going in and they're actually localizing the product, making sure they have all of the proper languages, all of the legal requirements, etc. And so you're seeing them be really thoughtful about how they go after that. The next one is really going back to that intelligent agreement management acceleration. So as I mentioned up front, like CLM has been around for years. Right? For a long time, people thought it was going to be a big market. Didn't really happen. So why is that? Well, it's difficult to implement. So if you're going to implement a CLM system, you have to take all your existing contracts and upload them. If you want it to really be intelligent, you also have to kind of mark up these contracts to some degree and say, okay, flag, what are these terms? Help train AI on the contracts historically to say, okay, if I want to do this intelligently, we have to understand what these contracts are, what the terms are. As an example, Morgan Stanley, I know, implemented a system. It took them 2.5 years to implement. No one wants that from an enterprise software system. That is just a ridiculous amount of time. And so time to value was very, very low for this type of software. And then a lot of times substitutes worked very well. You had cloud storage. You could store it as a repository. You didn't need their editors necessarily. You could use Microsoft Word and other things. So you didn't necessarily need these kind of bells and whistles that a CLM brought. With that being said, I think as AI has gotten better, particularly Gen AI, that's really good at summarizing documents, understanding documents, tagging terms. It's really reducing a lot of the friction. And so a big part of the bet here is really that Gen AI is going to open up this market in a way that historically it's never been able to be opened up. So instead of having an army of folks come in and do a bunch of professional services, the AI is now able to ingest all your contracts, do that work that humans had to do that was expensive, that took a long time, get them into the system, and then they can start to add value even afterwards through new features. And so you're seeing it being able to just, instead of have templates, hey, here's my NDA template, here's my sales template, you now have it being able to draft more dynamic documents through Gen AI, or redline documents when you're negotiating a document, and knows what your positions are, what you've historically accepted. It can automatically look at that and say, okay, this document's off from our positions in X, Y, and Z places, flag those for you, and it provides a lot more value than the historical systems have. We've seen some startups actually starting to have traction here. So yes, there's competition, but there's very little competition meaningfully for Docusign. Docusign is the brand name here. But I see the startups actually having traction, meaning, hey, this market is starting to open up. There's a real market here. And I think Docusign is really ripe to capture this. And to really capture it, they went and acquired a company called Lexion. So Lexion is kind of their Gen AI play. They had another platform before this that was, I would call it a previous version of AI. Lexion's a modern platform. They paid $160 million for it. It was about, call it 16 times revs. I think they're about $10 million in revenue. And that's really been the core of the IAM platform that they bought in. And so you saw a pop in this latest earnings that they just reported, and it wasn't because it was like, hey, a knockout quarter. Yes, overall growth was accelerating. It went from 8 to 9%, from 7 to 8 to 9%. But what they talked about was IAM is today, their CLM is low single digits of recurring revenue for them. By the end of the year, their fiscal year this year, which ends in January, so call it fiscal 26, they're going to expect that to be at least double digits. So what does that mean? Well, in their fiscal 24, like their CLM platform was somewhere between 100 and 125 million. They expect it to be at least over 300 million by end of 2026. That's a 60% CAGR on this platform. That's actually quite impressive for a new product inside of like a mature company. And
But
they
it's
can
still-
continue.
it's- Just a quick question: isn't it
Yeah.
still just like still a tiny percentage of their overall business? Like, is there really a driver here? Like, you look like it looks like it. You sort of have to give them the benefit of the doubt for, almost 5 years of growth in that next generation product where they haven't had success before on the CLM side. In a slightly less or more competitive market, right? Because AI has maybe made the moat much smaller for any company to build this type of solution. Like, how much?
I think the moat on the technical side is lower. What a lot of these startups don't have, and why someone like Alexion would sell to them, is the go-to-market's really hard. Like, they can sell this into their existing customer base. They have a high-touch sales, which is exactly what's needed here. They've been selling CLM for several years. They have that go-to-market already down. They have partners. They have a channel. I think that's what's really hard to develop if you're a startup. And so I do think they have a huge advantage here in going to market versus a startup.
I think they have an advantage going to market, but you're sort of like, you have to believe that like this is the big unlock for the business, and even if you do, you're really only going to get meaningful credit for it in like 2028 kind of thing, assuming that like everything goes right and there isn't like real price compression here, given like the barriers to entry are fairly low.
I don't know if the barriers to entry are fairly low. It's like most things. It's like, do you have the data to really drive, a meaningful, like you can throw this in OpenAI and you can get answers on a contract, but like to have really good responses, like you have to have specific data. Like DocuSign has that data. Like they are focused on this. I do think where you're going to see more applications have success with Gen AI is verticalized. And so, whether it's like a cursor in, in helping, engineers write code because they're focused specifically on that and they have better data and better platform than, say, the generics. Like DocuSign is focused on this problem and this problem only. And so if they can execute, I think they will do very well. So in my example down below, I show, okay, 2026, the street forecasts them. They gave a low guide of, call it 5 to 6%. That gets them to 3.1 billion. We're saying, okay, IAM is 10% of revenues. That means they're just above 300 million. Let's say instead of 60%, which was on the low end of the growth estimate that they've been doing, they drop down to 50%. By 2029, you get to over almost a $1.1 billion business of SaaS that's growing at a high rate in a huge market TAM. That's actually quite attractive. It'll be a third of the revenue at that point. The company will be growing in double digits.
But you're making a bunch of assumptions there. One, you're
they're already growing that fast. They are seeing it grow that fast.
Yeah, but growth is diminishing with scale over time, especially in this type.
Maybe not. It's not.
I think if you look at every
at this stage of a
enterprise company in the entire
but that's when you get really big. We're talking about something growing off a $300 million base. We're not talking about something growing off billions.
I think it's still growing off of 300. They haven't had success doing this in slightly adjacent verticals in the past. I think giving them the benefit of the doubt to have a terminal growth rate of 50% in this business seems pretty generous.
Well, it's not terminal. It's early stages for this market. If you
it's the next
this
6
market,
years.
25 billion. If you have a $25 billion market to grow to $1 billion of that, and you're the brand name, that's not a huge leap to make.
Isn't that what they would have said about CLM 5 years ago, though?
Well, the unlock is Gen AI. Honestly, the unlock is Gen AI. Because listen, if you're Morgan Stanley, you spent 2.5 years going through that because you have to pay a bunch of consultants to go mark up your contracts, get them into that system. The ML sucks. It doesn't add that much incremental value. Now suddenly that's done, with a wand of AI. And then you can do so much more in drafting contracts. It becomes almost like a lawyer for you, an in-house lawyer. There's so much more value to this platform than there was before. It's huge. It's a jump. This is one of the few areas. I think legal is going to have their heads turned upside down by AI. There's a few that I say off the bat, we talked about developers and writing code. Yes, right? Customer support, that's another one. Legal is up there with those easy use cases because it is so good at generating language and lawyers charge so much. This is an industry that is going to be disrupted. There's a ton of value to be had. And a CLM is a great place to take advantage of that. And I think DocuSign is well set up to execute on it. So this is, again, what you have to believe. If you don't believe that, it's not attractive.
Let's speed this up as usual. I'm having to tell you.
All right, this is my last slide.
We have 15 minutes in the can already, so you're looking at 56 minutes. So we're
All right. So valuation-wise, DocuSign generally trades in line with most of its peers. It's a pretty broad peer group here. So I've got everything from Salesforce, who's a close partner. They sell a lot into sales. Adobe, who's a Sign competitor, probably their biggest competitor. Real estate plays, legal plays. If you kind of look at that group, the Sign group trades a little bit lower. So if you look at it on an EBITDA basis, which is probably the best approximation for these guys, you're looking at 13 or 12, 13 versus 17 times for DocuSign. If you look at similar cloud, peers who've kind of been of that same era, same growth rates, you got Ring, Zoom, HubSpot, Bill, Dropbox, Box. They are right in line, 16.7 times versus, DocuSign at 16.8. I think the difference versus that group is these guys have a real second act. Most of those companies do not. HubSpot is the one that's still kind of growing. They're growing in the teens. All those other companies are tapped out. Ring is selling on, telephone technology on the desk phone. Zoom, they've penetrated their market. There's nowhere else to go. Dropbox has negative growth. Box is barely growing. like they have a real growth story that they can tap into. And then their legal peers trade very close to that kind of same group, 15.5 times, if you look at it. But all of these are pretty much slow-growing companies. And so I think about this in a risk-reward, way. And this is how we haven't talked as much about this on this pod as I would like, but I think like every investment you make, you should think about the risk-reward. And so the risk is like, what happens if CLM doesn't happen? Well, they should trade in line with their like signed peers, which is down 4 turns of EBITDA. So they lose 25% basically from where they are. That's the downside. Okay? If they actually hit and CLM is a thing, like their growth rate's going to go up into the teens. They're going to look more like a HubSpot. Well, if they trade like a HubSpot, they're going to go up 2x. HubSpot trades at 10 times forward revenues. They have a big market to go after. They have a growth story. It becomes much more exciting. So to me, hey, you can get 2 times you can double your investment, downsize 25%. I like that trade-off. It's a 4x trade-off to me. So that's a very positive risk-reward profile, and that's why I argue Docusign's a great investment.
Just to be clear, though, in order for them to trade like HubSpot, they would need to triple their revenue growth.
I had the same thought. That was exactly what I was going to say. So
well,
you really
okay.
believe? Like, what does the
I think
CLM
they've
have to
guided.
do?
I think they've guided historically for the next quarter. They've been going up every quarter, 7, 8, 9%. So they're at 9% in their last quarter. So yes, they guided to call it 6%. End of the day, like they are 5-6%. Like they're gonna outperform that. We know that. Like it's the old beat and raise game. So like if we say 9% is the baseline, like it's not that hard to get to double digits. And like CLM is gonna be the thing. The IAM, I should say, is what's gonna push them there.
Gotta be a little careful with that because the 13% is probably sandbagged from HubSpot if you believe that.
Yeah.
I mean, and is CLM? How big is CLM? Like, I mean,
It's a big market. It's a huge market. If people actually take it,
But
like
what percentage?
it's a greenfield. Every enterprise could have a CLM. Most do not today, or it's homegrown, or they're using tools that aren't really CLMs.
On the risk
so that's
reward
the opportunity set.
On the risk reward side, I do think like the chance that they inflect growth and trade at 3 times, grow 3 times faster than they're currently growing is, I think, in my opinion,
They grew 9%. I'm not saying they need to grow 3 times 9%.
Let's just assume HubSpot, like, because these comps are outdated or using the same data.
No. HubSpot is growing, is estimated to grow 14%. So they don't even need to double their current growth rate, just to be clear.
If you believe
it's basically 2.5 to 3x. I think the chance that they do that is
9
much
to 14
lower
is like 1.5 times, just to set the record straight.
Then this brand new platform that has never worked for them in the past actually takes off.
It's
in the next 5
working right
years.
now. They're seeing it working.
It becomes $1 billion business for them. But nonetheless, we will cover all this.
They're growing
much
60% on today. That is working to me. All right, give me something that grows 60%.
Are we done here? Are you done? Get off me and let the next
I've
guy
made
on.
my case.
Let's, all right, Brucey. Let's run a train on this stock. You're next.
Signing off. That's so much better than signing me up.
It's not that much better. I couldn't think
It's not much better, but it's still better.
I didn't have that little like pen icon from Microsoft Word 1995, so
I was going for the fountain pen on purpose. All right.
Yeah, it worked. All right, so moving to the Docusign, I'm keeping it real tight. So Docusign's core product, as I've kind of hinted at here, it's just a ho-hum product that's been in the market for, it feels like decades at this point. They've got no real moat. If you just look up the competitors that Docusign have, they're in the dozens. I mean, there are literally free versions of this, freemium versions of this, stuff that Adobe has that's an enterprise version of this, stuff that Box has. I mean, this is a product that has been commoditized in every single possible way. And I think that their core product will continue to face pricing pressures and intensifying competition. This is something that you could vibe code this product in 30 minutes. It's one of those things, I think, where you can't really build something that's super sophisticated that's effectively a signature product. Do they have a little bit more jazz on the enterprise side? Yeah. Do they have a better go-to-market machine? Yeah. Do they have more capital to go after it?
maybe, but it isn't something that has like real staying power. It doesn't have like real network effect.
If you need an MVP, I agree. Like, you don't need a DocuSign, but they've kind of become the classic example, the Kleenex, right? Like, when you say you're going to e-sign, you say you're going to DocuSign something, and so they've become that brand name. People go to it.
But I use a
trust
sock
it.
and I don't use a Kleenex anymore.
But you can use whatever somebody sends you. Say you were gonna sign for a new house and they sent you an Adobe e-sign. You would sign that too. Like it would make no difference to you whatsoever. And like I just think that like there's no real moat here other than like they've been in the market longer than anybody else and they have
Brand is a huge moat. Don't discount that.
I think that the market has caught up with them. It'll continue to catch up with them. This isn't something like where they'll have price elasticity.
But you don't.
Is there any
you don't
evidence of
see-
market share gain? Would be a question. Like, I don't know if there's share data on that.
Adobe doesn't disclose, but the other independent players, no one else is growing faster. There's nobody that's taking share from them that I've seen.
The one thing I will say that I agree with George is they do need a second act because this act has gotten old and tired, and people are not willing to give it as much value as they were in the past because it's just not growing as fast. Like this is a mid to low single digits, like as a standalone business type product. It's not going to get much faster. Their base is getting like slightly bigger every year. It's just
Got a $50 billion TAM.
They're milk, yeah, but this product alone has a $25 billion TAM, and it's going to grow in the like mid.
Or
to
yeah, sorry,
low,
25.
Mid to low single digits. Like this has got to be a cash cow for the company at this point. They focused on efficiency and not on growth, and basically, making this a profitable company. So there's no juice left in this squeeze. It's just it ran out several years ago. COVID was a nice bump though.
Well, if you look at like one counterpoint, like if you look at markets like Japan, which actually does have a publicly traded player there, it's one of their focus markets. Like they are growing, 25, 30%, the company there locally. Like it is a focus market for DocuSign. It's the third largest economy in the world. They do have markets that are still attractive internationally. I think it's just not a domestic growth.
But international
story
has been a part of their plan, like for years. Like they just haven't been able to crack it, and it doesn't feel like there's any
think
like
they've
real
done
catalyst.
it or approached it in the wrong way with the previous management team. I think the current management team is being very thoughtful about how they go about it.
I don't know. I think like the catalyst for international growth for like a legacy product like this is a stretch for anybody to like invest against. As George mentioned, they have a couple new products, the Contract Lifecycle Management, the Intelligent Agreement Management kind of modules. I think are necessary to prevent further stock deterioration, but I just don't think we have enough data on whether these new products are going to be able to save the company, and that's what effectively they have to do at this point. Otherwise, you're basically investing in a slowly declining company with very little moat and a ton of competitors. So I do think it is something that like you as an investor would need to double click on and understand more. I just don't think you'll have any data. And even on George's data, like you have to believe this becomes $1 billion business unit, grows 50% for the next 5 years and becomes like, effectively, the growth catalyst for the company, which like
next 4 years,
which I feel like is also a very big bet to make in this market. And as I've seen enterprise companies at every scale, like it's hard to keep growing at 50% year over year on bigger bases. The last point is, what is this stock today? And I think I think George is right. Like I think this is a company that sort of like trades in line with where we would expect it to trade today, just because like it's become a slower growth company. It trades on EBITDA. Sorry, I should have added that in there just as EV to 25 estimates. So it trades on EBITDA as kind of a proxy for cash flow. It's not super exciting. It's a 29% Rule of 40 company, so they do need like more growth or more profitability for it to register on anybody's radar, I think. But I don't know if there's like a clear and straight line path to get there. So I think like investing in the company is sort of, as I've said on the left here, a bridge to nowhere. Like it's not clear to me that the growth story's there. It's not clear to me that the efficiency story's there to get them back to like Rule of 40 because they're growing so slowly. And like I just think this is a market that is, fundamentally very, very competitive with a very, very small moat, and you won't have like real pricing power.
So I agree on eSign. Like, end of the day, there's a lot of free or cheap alternatives that you can go take. What I like about them is on like CLM or the IAM side is there's not a lot of big competitors. Like the people they are competing with are kind of like, yeah, they're okay startups, but I would much rather compete with like some of those startups than like say like a Microsoft or an Adobe in some of these other markets. So to me, I actually like the competitive dynamics. I like their ability to go execute in that IAM. Like I think it's a decent bet compared to a lot of other things you can bet on.
I think like it's a decent bet, like in isolation. The issue is like they made a decent bet on this in the CLM space several years ago, and they weren't able to execute. And so like I think you're
Gen
making.
AI.
I
Gen
think
AI
you're
is the
making a
change.
bet that like Gen AI is like a miracle drug to unlock this market for them.
It
which,
is.
Like I don't know. I mean. It feels
is.
like the way I honestly see it is like there are better places to deploy capital than DocuSign. Just like if you look at the market in its entirety, I mean, you're not going to lose all your money in this company, but like, will you actually will your capital appreciate in any meaningful way here? And like, my guess is probably not, maybe, but you know,
the transactions in general. I mean, it's a play on transactions, signatures, right? Like, so it's like home buying and
On the old side of the business, but I think what we're
or the
arguing
current
is
business. Yeah, the current business.
on the
So that's-
contract lifecycle management side is where all the excitement is at. Like I think they can hold their own on the e-sign. I think you'll continue to see mid-single digit growth there as they penetrate more international. They find more use cases. Yeah, maybe volume goes up and down. There'll be some pricing pressure that offsets that. But it's really like, can they do something in that contract lifecycle management
This
space?
is also stock that's been like completely range bound for the last 3 years. I mean, it's kind of like
No,
traded
it's actually
50 to
going up now.
100.
It's breaking out.
It's
Look at the recent
Oh.
trend. It was
It's
stuck
sell
between like
side.
50 and 90, 50
Yeah.
and 70 for a long time. It's breaking out.
pops and drops, baby.
it's
Good shot.
in the last 5 years, it's up 6.5%. So I don't think it's.
6.5,
I mean,
that's
that wouldn't be what I would consider breaking out. But
Yeah, well, you're picking time frames. Over the life of a public company has outperformed the S&P, which has done very well during that same time frame. So
All right.
that's actually
All
quite
right,
an
anything new to say
accomplishment.
here? Let's wrap this shit up. Let's do real
So
opinions.
one thing I will say quickly that I don't think we say often enough is like when we say perform or outperform, like we're talking about versus the market, right? So like end of the day, the market goes down 10%, this goes down 5%, you've outperformed, right? But it doesn't mean you've made money. So that's how we judge our performance here is really versus the market
Alpha.
in general.
Whatever. I'm a hedge
Alpha.
fund. I'm a hedge fund.
So,
I'm
anyways,
absolute
all right,
performance.
let's go
letter
to
beta all the way. So, all right. So, George, since you're the bull, open the kimono. Show us what you got. Are you really a bull under there, or is there a bear under that robe?
So I'm actually a bull. Like I didn't know going into this what I would be. I hadn't kind of like refreshed myself on this in a while. But I don't think it's kind of like the Twilio story to me when we went in there. Twilio was like a similar kind of era stock, and I was a bull on that. It's done well. It's it's not going to be something that you're getting 5x returns on, but can you get a 2x return and with limited downside? I think it's possible. So I like those odds. I would take a bet here. I think Gen AI really is a game changer for this type of technology. So if they can execute on that, I like it. If they don't execute on it, my downside I think is like 25%. So I'm willing to take that bet.
Okay.
I'm a true bear here. I think it's like
Ooh.
there's a lot of I think maybe you're right, George. Like the downside risk here isn't massive because they do have a fairly steady core business and they have focused on kind of profitability here, and so I think they can kind of be masters of their own destiny in some way. It just isn't like there isn't very much upside though either. I think it will continue to be range bound as it has been for the last several years. I think there's much more interesting, better ways to deploy capital into this market. I think if anything, they're going to be the victims of Gen AI as opposed to like the masters of Gen AI. I think honestly it makes the moat much smaller for them. And every other
you don't put any stock into the go-to-market that they have versus other players.
I don't think.
Is it competitive or is it the market that you don't believe in? I guess in the CLM market.
I think they have a great. I mean, I think they have a reasonable go-to-market, but I don't think it's like better than Adobe's or better than Box's or better than any other.
Adobe's not going after CLM.
Yeah, not yet, but like if Gen AI is the miracle cure for everything, and they can deploy a solution in 3 weeks instead of 3 years, then like a lot of big companies will get into these markets. If it's a $25 billion TAM, and they can build a solution overnight, like it will just invite a lot of competitors. So. What I'm saying is, like, I just think that, like, I actually don't. I think there's more risk to them being victimized by Gen AI generally from this type of technology than like them actually, using it to accrete value. So, I'm on the bearish side here.
All right, I'll break
Gordo,
the tie.
break the tie.
I'll have to say that I tend to be more in Bruce's camp of being a bear, and it's just because at the end of the day, I mean, the thing that he said that's most
I feel like you guys always gang up on me here.
Yeah, but you like it. So, on the show, you mean? So, different. I didn't know what you meant. So, I think that just the comment that it's just like. I don't know. I kind of look for a couple different situations. Either you go when you're bullish, you kind of want like a really sort of like good mode, in a good secular story, kind of at the same time. And like, definitely, I'm not convinced that like basically first mover and marketing is really that good of a mode here. I kind of buy the argument about commoditization. I mean, CLM is interesting. I think you made the best pitch you could. There's hidden value here, and I think that's admirable. But at the same time, like, I guess I don't know enough about the CLM piece to really believe that these guys have a sustainable competitive advantage or a real right to win, other than just having a really expensive sales force. Like, that's just like high-tech sales force. Those are the companies that get disrupted. And it's not screamingly cheap. Like, it's not like one of these stocks where there's this big margin of safety and a huge pile of cash, and it's just stupid cheap, trading at book value kind of shit. And you don't see tech companies trading like that very often anyway. So, book value is kind of a bullshit. It's just not a metric thing software companies trade on, for example. But it's just not screamingly cheap. Like, I want to buy this thing like 30% lower, the bottom of the range or something. Like, what's the bottom of the range? Is it 25? You said I want to buy it there. Like maybe.
We all do.
It was an easy 25%. But now it's like, okay, I have to actually have some faith in this thing, or it's dead money. And there's so many exciting things to buy out there. Well, I shouldn't say that. They're just much more dislocated stocks, out there. More interesting secular stories. It's like, okay, signing. Okay, we're going digital with pens. Oh, cool. So, like, that's the pitch. Plus, now we're getting into contracts. I mean, contracts are a mess, and there's probably value to be added there. But yeah, I feel like, and they're in a position, as kind of like, it seems like it's adjacent. People are already signing contracts with Docusign. Okay, so I
got
guess
the brand.
So yeah, it's kind of like a new market or new product, same market kind of idea. It's in that closer box. It's not a new market, new customer. It's the same customer, new product. So it's not that far out of innovation. So I think that you did as good a job as you could, but I'm just not there. Just the valuation is just not compelling enough on that pitch. So, Bruce, I'm going to hand you, I don't know what kind of trope we have here. Just the tips. I think it's like a pair of. It's like one of those like stripper purses or something with bedazzled one.
Bruce can win that. I'll let him have that.
That they used to carry their money and cigarettes around in. That's what I've heard. But yeah, Bruce, you win this one. I guess we'll just wrap up
until the look back episode in which I champion my big gains.
Yeah, that's right. So I think that we're going to the next one very well could be core where these actually go out. But so everybody stay tuned for that. But I guess we'll close. We always say, which is bulls make money, bears make money, pigs get slaughtered.
We out.
We out.
Say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm not talking around.